Hello everyone, Will Flanagan here with Pacific Northwest Home Loans. We are going to talk about today the most common loan types and a few bullet points to each one of those. One, we have the FHA loan, Federal Housing Administration. It doesn't have to be a first-time home buyer's loan. That's what most people think. It is most commonly with people that tend to have lower credit scores, might have had a bankruptcy in the past 2 to 3 years. Typically, that's when you would use the FHA loan. It's a great loan product for folks. It allows them to put down as little as 3.5%. It will have what they call private mortgage insurance on the loan, federal mortgage insurance on the loan that's financed in, and then a monthly payment on that as well. The good thing about the FHA loan, typically rates tend to be quite a bit less than the conventional counterparts. But over time, even if you took the loan the full 30 years, you'll have mortgage insurance premium paying on the loan. Currently, as it sits in 2025. However, most people get an FHA loan. It gets them in the door, gets them into home ownership. And a couple years go by, they typically refinance out of the FHA loan into a conventional loan. And the conventional loan, it's a great product, is provided you have credit scores that are 720 or higher. Here at Pacific Northwest Home Loans, I can do them down as low as 680 credit scores for a conventional loan. The nice thing about that is we will allow you to put down as little as 3% on a conventional loan. Yes, you do have private mortgage insurance, but unlike the FHA loan, if you didn't do anything with that loan, you took it the full 30 years, you still have mortgage insurance. However, in a conventional loan, once you reach 78% loan to value, the lender will go ahead and make application to remove the private mortgage insurance. I've seen it done as little as 2-3 years to make an application to remove the private mortgage insurance. And that's a simple phone call to the lender and say, hey, I've reached at that point in time where I've got enough equity that I can remove the private mortgage insurance without refinancing. That's a very key factor. So make sure you stay in touch. If you work with myself, I usually give my clients a call and an anniversary on the 2 and the 3 year mark, and I ask them like, hey, I think you've got enough equity in your home to remove the private mortgage insurance. Go ahead and let's make application. You email me, talk to the lender, and they send over instructions on how to remove the private mortgage insurance. Conventional, typically rates can be a little bit higher than FHA, but the higher your credit score is, the more grace we give you. FHA is 2 years. We look at your 2-year history. We look at very detailed information. Conventional, we give a little bit more grace. The higher your credit scores is, the more grace we will provide. Then you have the VA loan, and that only applies to veterans. They get 100%. They don't have to put down any money on the loan. There is no private mortgage insurance on that. So it's a veteran VA loan is a great loan product. If you work with a guy like myself here locally, have great access to many lenders that love our veterans. So, Will Flanagan here, Pacific Northwest Home Loans. If you have any questions about your VA loan. And the last but not least is one that most people overlook is the USDA loan. It's a rural loan. You gotta have to be out in a rural area, and that you can easily look those areas up on USDA.gov. There's an actual site you can look up, put your property address, and see if your home qualifies for a USDA loan. No money down on that. It does have mortgage insurance on that. It's a very limited amount. It's not as expensive as FHA. Rates tend to be in line with FHA, but there's some key quirks about USDA that most people don't know. And this is the most common one we get. USDA, it's got to be rural. It can't be an active farm. It has to be a home you're going to live in. Typically, USDA will allow a garage, but they will not allow for a shop on the property or pole barns or any additional outbuildings. 2 is it can't have granite countertops. Yes, they do look at that information. And then 3 is it can't have a swimming pool for USDA. So those are the latest and greatest things with USDA, but it's a great product. It gets you down with little as no money down. If you work with a guy like myself here, I can help you navigate the waters of getting a USDA home loan. So any more questions, don't hesitate to reach out, email me or call me, 509-263-7133 or will at PacificNorthwestHomeLoans.com. I can answer and navigate all those questions between all the different loan types.